Hello traders, Gary Wagner here. Just before 10 o'clock in Honolulu, 4 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. July 22nd, 2016, and this is the Daily Report for Gold and Silver, our weekend review in which we combine it with trending markets to give you an overall sense or scope for activity this week in the market, as well as our forecast for next week. Gold continues to trade under pressure, trading off about $7.50 today. We're looking at August COMEX futures, 1323.50. The low on the day has been 1319, and the high on the day is 1334. So traders, absolutely no doubt, we have seen continued pressure in the precious metals markets this week. Gold trading off today, off about $7-8 on the day. We've identified a couple of key areas that we have been looking at. The first one is a 50% retracement. It is a retracement of this rally here, and that comes in at 1315, market at 1323. The next level is a 61% retracement. That comes in just above 1300. You can see that, and of course, these are both retracements from this rally move from approximately 1254 to 1377. We also talked about the fact yesterday that we had the potential or the development of a potential buy signal, and that was because we had identified a simple two-day candlestick pattern called an engulfing bullish. We also talked about the fact that it is a great indicator of that key reversal. However, you cannot take that call without getting what we call a confirming candle. A confirming candle on this pattern would have meant that today the market closed higher than it opened with a higher high and a higher low compared to yesterday's trading activity. The other thing that I find interesting is most of the pressure this week has definitely been due to a dollar index and the dollar being strong. I've just gone ahead and pulled up our dollar index, and as you can see, gold's trading off about $7.90. Of that, $7.30 of that is directly due to a strengthening dollar, and normal trading only accounting for about 60 cents of that $8 move. So you can see the kind of influence that we've really seen in the US dollar index. So what are we looking for? Well, I absolutely am still under the belief that we are at the tail end of this current correction. Now realize that we've seen this market move up dramatically from these lows that came in at about 1050 or a little bit below. December of last year, January of this year takes us up to our first really record mark, and that's right here at around 1280. From there, we go into what we've labeled as an irregular ABC. The reason it, of course, is irregular is our B is above 1. From there, we completed our wave 2. You can see that's in green. You can see this is in green. We're now in a green 3. Now, the subcount behind that is another story, because I believe we have seen waves 1 of 3, 2 of 3, 3 of 3, and we are currently in 4 of 3, of wave 3. So whether we find support in this particular area, meaning 1315, or we find support, I believe it will not trade too much lower than 1300. I think we have absolute support that will enter in the market at some point, and I believe it should be next week. It could take longer, because the one thing about the techniques that we use, it does not bring in a time element, simply a price element. But I absolutely believe that we'll find support in this area, and then the real question is, where could this particular last leg of the rally, meaning wave 5 of 3, take us? And to do that, there's a couple of simple calculations that'll show us our upside targets. Traders, as you know, when we go and create our forecast models, we rely in many instances on basic Elliott wave modeling. Elliott wave modeling has some clear-cut rules and models that we see if they are applicable to determine a next rally or a correction. Now, Typically, when we look at a wave 5, we know that wave 3 cannot be the shortest of the impulse waves. And typically, on a wave 5, we use wave 1 as our benchmark, and then that wave 5 is typically equal to our wave 1. Now, I have a multitude of different extensions in here that are based on these longer moves, but the simplest way to actually go in and to create that kind of extension is to simply create a scalable line, which I have. You can see it begins down here at 1200. It concludes at the top of the market here at around 1314. And simply what I'm going to do then is move it up. Now, there's two different areas we want to look at. If, in fact, we see support come into the market at this first designated area, that 50% retracement, and we use that as our starting point for wave 5, and we calculate a completely equal wave 5 to wave 1, meaning we've got our wave 1 and then our wave 5. Well, that takes us to about 1445. And so that is the upper end of the target. Those things have not changed. And you can see how they kind of fit together like Russian dolls or like fractals. They will all tend to work with each other. Now, if in fact that is not the bottom and the bottom comes in at 1300, well, that's going to change our forecast because that's where we would actually start the beginning of our fifth wave. So we'd be looking at a 1, 2, 3, 4, and then our final fifth wave, that would take us to about 1400. So in both of these models, meaning whether the market, or I should say, if the market finds support at 1315 or at 1300, and we get a rally after that, I am looking for gold to breach $1,400 per ounce at this next rally. Exciting stuff. Silver also trading under pressure this week, trading off about 0.6% today, 1962. That's our current print. 1957 is the low, and 1994 on the high of the day. Silver had been on a tear over the last couple of weeks. That would have been about 2 weeks ago. And I draw your attention to this 1 week that we had, now coming in roughly a month ago, in which the market opened at 1750 and traded above 1950, a $2 move in a week. That was followed by another strong move, but an exaggerated high. In other words, it came in, it tested these highs at this 61% retracement point. 2075 we'll round it off to. It was unsuccessful, closed well within that. The following week we identified this pure, almost pure doji star, and then to top it off, the weekly pattern that has been identified with the formation of this last candle is a three-river evening star. I believe silver could maintain the pressure that we've seen. I think that we have definitely seen a decoupling between gold prices and silver prices, with them acting independently at this point. And my first level of support in silver comes in with these tops right here, roughly at $18.50. US dollar continues to trade strongly to the upside as the currency of choice globally. Today, we've got the US dollar index up about 0.4%, 97.40, the low 96.82, and the high 97.54. Of course, as we talked about when we looked at gold a little bit earlier, the dollar has been absolutely responsible for much of the downside pressure that we have seen in the precious metals markets, as well as crude oil. Whenever we look at the dollar, we're looking at the dollar index. And the dollar index, of course, is a basket of currencies trading against the dollar, which does include the euro, the yen, British pound, Swiss franc. But what we can see is this dynamic move to the upside in the dollar index. And when we look at it just against the euro, which is what this bottom chart is, you can see that the euro over this last month has been under pressure, and not nearly the kind of pressure as we see strength in the dollar in terms of percentage gains and losses. I'm still looking for additional pressure in the euro and in the pound. Crude oil continues to fall, had a pretty significant downside move this week, as well as today, off about 1.33% or 61 cents per barrel to close at 44.14. Of course, as you know, we have been on record looking for lower crude oil prices. Our target has been and remains between $42 and $44 per barrel to sideways in terms of what we are looking at next week. So although we didn't have the kind of dynamic upside week, that explosion to the upside that we saw last week in U.S. equities will close on a new historical high, a record high, with the Dow Jones Industrial Average closing up about 43 points. We're just going into settlement now, 18,558. Standard & Poor's also trading higher on the day, up about 4.5, almost 0.5% at 2167. That, of course, is still actively trading for another half hour or so. And this, of course, is the E-mini. Absolutely no doubt, a clear and decisive upside move in the U.S. equities markets vis-a-vis the Dow Jones Industrial, NASDAQ, as well as the Standard & Poor's 500. We're looking at an E-mini contract. Our tops prior to this new breakout came in just above 2120. Last week, tremendous breakout to the upside. This week, a new close to a new record and historical high. When we compress this chart, it really becomes evident the kind of breakout that we have witnessed over these last couple of weeks, because considering the fact that this market spent years plotting its way back up after the 2008 meltdown and subsequent moves, you can see that this particular rally that came in at the end of 2011 took us to the first sets of these record tops really at the end of 2014. And 2014 as well as 2015 was really characterized by the fact that we had strong headwinds at these record tops, and we had some pretty severe downside corrections in the market nonetheless. I have been on record stating that I believe we would see equities go to a new historical high. We have certainly done that over the last couple of weeks. My upside expectation for the Standard & Poor's vis-a-vis the E-mini remains at 2200. Absolutely no doubt, another exciting week in the markets overall. U.S. equities continue to climb to new record and higher ground. The U.S. dollar continues to be the currency of choice globally and has been acting as a safe haven. That same statement cannot be said for the precious metals, specifically gold, with gold continuing to trade under pressure this week. We are looking at a tentative bottom, if not in this area, at about 1,300. That would be a 61% retracement of the most recent move. And as I said last week, I do believe we have more downside pricing in gold. However, I also believe it's going to present us with an excellent buy opportunity, whether it's this week or next. That's what I said last week. I think that the only caveat or change, I should say, to this week is I do expect us to see some sort of tentative bottom in gold next week. That being said, look for a special trade alert to go out signaling it is time to get into the market and enter our next trade. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.